Traders again ignored a flow of important data from Europe. Today, they paid zero attention to a slowdown in the UK consumer inflation growth. The UK inflation dropped to 10.7% from 11.1%, but failed to affect the market situation. Notably, economists had expected a smaller decline to 11%. The pound sterling should have faced significant pressure. However, the situation is the opposite because of the expectations of the FOMC meeting. Yesterday, the US published its inflation report, which dispelled all doubts about the magnitude of the key interest rate hike. Now, economists assure that the regulator will raise the benchmark rate to 4.5% from 4%. Traders priced in this decision just after the publication of the inflation figures. That's why no one is interested in the key rate hike at the moment. Traders are focused on the comments that will be provided by Jerome Powell after the meeting. Analysts suppose that by the middle of 2023, the Fed will start slowing down the pace of the key interest rate hike. The expectations are based on inflation reports and the forecast provided by the Fed earlier this year. However, traders should pay attention to a change in the rhetoric of the Fed's policymakers. More and more often, they emphasize risks associated with the labor market. There are a lot of signs of the labor market overheating. Higher interest rates are the only way to improve the situation. The slackening inflation prevents the regulator from raising the key rate as before. However, the Fed is likely to continue the monetary policy tightening, though at a slower pace. Thus, it's expected to raise the benchmark rate, for example, by 25 or 20 basis points. This may last until the middle of the next year. After that, the interest rates will remain high, for instance, until 2024. Such a scenario significantly differs from a trader's expectations if today the Fed's policymakers make such announcements. The US dollar is likely to resume climbing towards parity with the euro. Now we see that the euro reached a new local high of the upward cycle. As a result, the quote exceeded the upper limit of the sideways channel of 1.05 and 1.06. This reflects a trader's great interest in long positions. Under the current conditions, a lot will depend on the FOMC meeting results and the press conference. From a technical point of view, the price consolidation above 1.06 will boost the likelihood of a further rise. If the pair slides below 1.0550, it may break the level of 1.05. Since these days rich in events, we may see price swings. Meanwhile, the pound sterling jumped amid a massive sell-off of the greenback. As a result, the quote broke the resistance level of 1.23 and locally touched 1.2443. In fact, this could be considered a technical signal of the uptrend continuation. If the price settles above 1.2350, it may continue gaining in value. In this case, the pair may once again reach a new local high. A target for buyers is located at 1.25. A downward scenario will become possible if the price drops below 1.23. The decline should also be supported by macroeconomic data. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.